Thank you, Angel and Heidi. Hello, everyone. Welcome aboard and happy hump day to you. Second day of June, so I can't say happy new month. Did that yesterday, didn't we? Welcome aboard, those of you who have joined early. It's great to have you guys on board as always, and I'm sure that we'll have an interesting session. Actually, not sure if Ainsley's coming in. I haven't heard from her, so I'm sure she will be here at some stage. But if not, then I'm going to do a little bit of an education session with you on. I noticed that. Actually, I'll come back to that. Let's have a look at the pound first. I'll tell you what I have in my head. Well, a little bit of what I have in my head, anyway. You'll try and you'll be very hard pressed to work it out exactly what's in my head, but relating to some education today, then hopefully that's going to be front and center. If Ainsley doesn't come in, most certainly. Even if she does, I'll probably have time to impart some of that knowledge for you. So the pound, do we trade it range-wise today? Do we trade the breakout? Yeah, look, we came back in, didn't we? Didn't get a lower high until here on the 4-hourly chart. How did we go? Nothing, see? That was the only one, but, you really want it to get back to here. This is what we were looking for yesterday, right? And it just went bang, bang. Shame that, but, you can only trade what's in front of you. I suppose we should mention that false breakout, right? And this, I guess, is very much, no, I don't guess, I know is very much why that one candle false break is an option, because it is a clear false break of the top of that range, but how can you get into it? It's way too late. That was your only option, right? To trade the one candle false break, the same as we did on the euro last week. I'm sure you remember that. Those of you who were here, we traded this bar, right? Entry there because it was a breakout. And if it is a true breakout, then chances are price is just going to keep going. If it's false, however, and as I said at the time, the buyers are going to be wrong there. So you want to pick this up. It only went down to here, but that's what, 1.5 times your money, I suppose. How did that work out? So say 60 pips, not quite, 1.25 of your money. That's not too bad if you can get hold of it. And I'm going to go into this a little bit later too, with the market the way it is and not a whole lot of follow through. I'm looking at changing my trade management or my money management in that instead of taking half off at our first take profit level, I might take 3/4 off at our first take profit level, just so we can keep ka-chinking the till rather than, getting the first take profit and then bang, trailing stops hit and there goes your profit. You're working for nothing. I don't like that. When the market's moving and moving a long way like this, happy days. But, when it's chunky like this, then I think that's probably a wise move. And that's what we might look to do, guys. Hello, Paul P. How you doing, mate? So are we trading the pound as a breakout? That's where we started. I get very distracted very quickly, don't I? Because all these things go around in my head and okay, let's go there. All right, so break back in really at the end of the day, wasn't it? So the 2-day range is kind of here and pretty much here where we are. So I don't want to trade at the bottom of the range. So that's just no good to me. It's 108 pips. So it's a no from me today on trading the breakout. Simple as that. Now, if I'm biased with the pound today, where is that bias? It's not clear cut, is it really, at the end of the day, because we're just hanging around here, hanging around the top of this ascending channel. And of course, price is very reluctant to go through this previous high. What, of course, that does deliver for us is a pretty strong resistance level. And of course, that is exactly what we saw yesterday with this selling bar. Top of the range, trade to the bottom, the rectangular range. Is that kind of where you're at? I think that's where I'm at. But I need to see a test of the daily pivot or something like that before I would enter. So the lower high that we didn't get yesterday, maybe we can get it here today. And if that's the case, we can look to trade it. But until that happens, it's a no from me on pound US dollar. So let's go and have a look at what I did put in the market this morning. Two more trades this morning. Euro Swissy was one. And I'm looking to, now this is very unusual for me, because I'm actually trading that bar short. Yes, I know, don't trade black body bars short, but here's my thought process. Bear with me. Monthly chart's really not that much help, except that bar there suggests to me that this level here, both support and resistance wise, is something that we're going to react off. And of course, that has already been the case. But we've slipped below this level here, which again is important to me. And currently price is below that. And in my opinion, we are in a downward momentum. I won't call it trend. Although you could make an argument that we've got lower lows, lower highs, lower lows, lower highs. But this bar here that we mentioned last week was an absolute corker for mine. That really does say a lot, that candle right there. Price went up to the monthly pivot, found resistance, but then it went all in a big hi SF, how'd you on? In a big fall from grace on a weekly chart. If you have a look at that on the daily, it doesn't look that spectacular, but there it is there. Amazing stuff. And it went straight back to the bottom of the range. We've managed to claw our way back into this area, but really at the end of the day, that is a lower high on this move. So bring it back to the weekly pivot. That is another lower high, and see the rejection that we're having already this week off that level. So I'm pretty keen to follow what I believe is pretty strong momentum. You could argue, of course, and you can always argue a case. Well, sometimes you can't, but mostly you can argue a case that yes, this is a bull flag, right? And we want to trade that off the bottom and go through the top, and I'm okay with that. But we're not at the bottom. We're mid-range, which is typically a hard place to trade from. But then I have a look at this area here, where we've probably got a range, or you could start just about anywhere really, but let's go with this one. So you've got a clear box range as well. We've come off the top of that. We've closed below the weekly pivot. Now a retest bar here is going to be very interesting. And if I saw that, it would be a double cross on the weekly pivot. We spoke about double crosses yesterday, and I could hardly find any. But here we may even be presented with one. Now, that said, if there's momentum based on this scenario here, this scenario here, and this scenario here, all strong bearish moves and giving us continuous lower lows and lower high. Well, lower lows kind of stopped here and we went into range. So even if you want to trade the range, that makes sense to trade it short to me. So for that reason, and all of those reasons that I've just mentioned, I think there's a good case to trade this short. The best case scenario, as always, is going to be a lower high after coming back into the range. But I think momentum's strong enough, and we've closed below the weekly pivot, that if price comes back to this area, it will go to the bottom of the range. And I'd like to be a part of that, because it not only could go to the bottom of the range, it could go to the bottom of the bigger range. So there could be a decent reward for us here, down here somewhere, right? And if we give that some beef, that level could be around about there where it broke out before. So if I look at that, that's 108.60, and we're entering the market at 109.49. that's pretty good for the risk that we're taking, only 58 pips. So I'm kind of on board with that. Righto, so that's Euro Swissy. I just spent a bit of time on that. Sorry, I was a little bit long-winded. At the moment, Euro Swissy not doing too much, that's for sure. The other order I put in the market today was Kiwi Cad. Now, Kiwi Cad is going in completely opposite direction to my preference. Of course, my preference being the direction in which I'm trading. That's pretty much a simple statement. And I'm trading this bar here. Now, I'm trading that bar on the basis of, let's go through this again. We've got a definite case here for both directions, and I fully get that. For the short, I can see this maybe as a bear flag. It's getting a little bit long, to be honest, but I can totally get that. Pardon me. I also saw the CAD starting to weaken a little bit, although the OPC meeting yesterday or today or whenever it was has kind of put paid to that, doused the flame a little bit. And I don't know the details behind that, but I do believe oil got a little bit of a kick. I don't know if that's sustainable, and I'd like to know if that was sustainable. We miss Ash, don't we? Because he's across all the fundamentals. But what I see here is, yes, and I know Ash should probably see a left shoulder, head, right shoulder, and that's fine. And if that's the case, this is the right shoulder. What hasn't really happened here is price has been unable to get below this level apart from 1, 2, 3 false breakouts. The interesting part about the last false breakout was that it was a double pump, and it created a higher high, higher low, higher high, and potentially another higher low. And that's what I'm basically trading here. So, so far, no entry, of course, and that's the monthly chart. But the daily chart is giving me, yeah, kind of, I'll call this a liquidity grab. Some would call it a bear trap, and that's all good. But immediately we went down to this level and took all of this liquidity from here. We bounced straight back. And if that's going to be the flavor of the day or the week or the month, then this should well be that higher low. So I'm really speculating that's the case. The really good part about all of these scenarios is that when you've got a bearish or black body on a candle that looks like it is a key reversal bar, and I'm going to call it a key reversal bar because to me, the low is lower than the previous low, and we've closed near the high, certainly not on the high, but near the high, and it's a black body. So I'm going to trade that pretty much every single time. The momentum, however, is clearly lower low, lower high, lower low, lower high, higher low, maybe. We don't know yet. But it's the first one, and always willing to take that on with about 0.25% risk, which I think is what I've got on here. Okay, they're the two orders that I put in the market this morning. Euro dollar was also very tempting, as were a lot of these today. I think I counted, well, I don't think I've got them listed. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 key reversal bars. Now, if, oddly enough, or not, the ones that I've chosen not to take, euro dollar has triggered. The reason I didn't take that, well, two really. One was when I was looking at the market today, as I do early, I hadn't had a daily pivot test, and the weekly pivot was dead ahead on the daily chart. So no trade there for me. I was going to be patient and wait for the daily pivot test and not risk 50 pips to pick up 12. So that was my reckoning there. Look, and that could still happen, absolutely still happen. And I'm more than happy with that. So that's one that we didn't take, but there are a lot of them similar to that. I won't go through them all. A whole 11 of them would be pretty crazy. The other order that I put in the market was Euro Swissy. Did we just speak about Euro Swissy? Sorry, I'm lost, guys. I think we did, didn't we? Have we done Euro Swissy? G'day, John. I think we have. I'm going to reckon that we have, because I said it was an unusual trade, didn't I? Because I'm trading a black bar short. Okay. Other things of note, we had 2 orders yesterday, one on Euro Kiwi, and I have, in fact, replaced that order. Now, reasoning for that is, well, I won't go all the way through this because we have been through it quite extensively yesterday. But to my mind, we've pretty much come off the top of the range. We've held up at the monthly pivot, as you can see on the weekly chart. And I was looking for this reversal off the weekly pivot, having gone bang through the monthly retest of the weekly. So just trading support and resistance, really. Got that reversal bar. And that's where we put our entry underneath there. Got a second one yesterday, which you could pretty much easily trade as well. Stop loss above here, entry down here, but it's pretty much the same trade in terms of the entry. So I believed that if we're going to enter this, it will be around about this level. The stop loss is problematic, but because we haven't closed above the weekly pivot, I was happy to leave my stop loss above the weekly pivot and therefore that candle. So I simply replaced that order on Euro Kiwi. So that is so far this week, apart from one, which was Aussie Yen. Now, Aussie Yen, I'm sure most of you would know that Ash has been in Aussie Yen for the longest time, a couple of weeks. I assume he's still in it. And I joined him, was it last week or the week before, with that bar the week before. Okay, so we traded that bar and we got a TP1 only, came back, hit our trailing stop. And that's what I was talking about earlier. I'm going to implement taking further profit at TP1, dependent on the circumstances, but more often than not, I'm going to take more off the table than 50%. Now, I haven't done that today, but I may amend that a little bit later on, as I say, if Ashley's, Ainsley, sorry, not Ashley. God, I've been saying that for years now. So same applies here, really. Although I note today we have taken out this high. I haven't closed above it, but we have taken it out. That concerns me just the tiniest bit. But I'm going to leave that order in the market at the moment. Same applies, you know, where our entry is well below the weekly pivot, and the pivots are pretty much providing, or should, if we get through here, they should provide some resistance. So on that basis, I've left that order in the market as well. That's it. I'm not going to go through the trades that are in the market and running at this point. Ainsley's here. There you go. Happy days. So without going any further, and I will, if Ainsley, if you're ready, come in. If not, I've got a little bit of education that I want to go through. Ainsley's here. Hello, mate.
Oh, how are we, chaps? It's a very nice sunny afternoon here.
Oh, so it is, according to your lying background.
My lying background is actually very similar to what's outside.
Is that right? Okay, nice. Well, I can tell you it's pitch black here. Pitch black here in Tassie.
Guts, huh?
Yep, pretty much.
Oh.
I see that gold's at a support level at the moment. Does that excite you?
It doesn't. It does. It had a massive pullback last night with some news, and you know how I like it. Well, once it's cut a level, I really would just prefer it to just go straight up, go to the next level. None of this mucking around. Let's have a little think about it. Let's have a little retest. What if it does a retest? And I got caught out in that earlier in the week when it decided to, how about I share a screen instead of talking and pointing at my screen? That won't help.
What did Telly Savalas say?
I have no idea.
Cuckoo, you know what he said? He said, a picture paints 1,000 words, baby.
There we go. Okay, well, let's go back over. I just need to drag my little faces back over.
Am I showing my age again? Yes, I am.
You are. You are. Although I do know that he was bald.
He was. Or he is. I don't know if he's dead or not.
I don't know.
We've written him off. Poor old Telly.
Okie dokie. So
Kojak, right?
Was he Kojak?
He was Kojak.
Yep. Okay. Now you are showing your age.
Everyone in the room's going, Kojak.
With a K.
Yes, with a K.
Okay. Well, let's have a look here with gold. I said we've had this. Let's start with a weekly, because this will probably paint a slightly better picture of what to really we should be expecting, because when you go to the daily, it's just like, okay, we like straight up. Straight up's good. That really suits my personality. But we've had a lot of long tails as well on the way to getting there, and it's coming back down to the 4 hourly, and you can see it's just it had a little bounce off going back into the end of last week when we had a higher low, and I thought we were on a bit of a roll after we came back and tested the breakout area here several times, and then we went down and just had a screamer down to the 50 moving average, bounced off that, and we keep going back over that 1900 level, and we all know that 1900 level, it was going to have a lot of sensitivity around it. We knew it, expected it, and it flipped around quite a bit, but there was news out last night that sent it screaming back down again to the bottom of this channel, and again another bounce off the 50 EMA. When you look at it,
what news didn't it like, eh?
Oh, there was something, and it sent the US dollar a little bit stronger as well. So I don't know, maybe it thought Bitcoin was going to 15,000. I don't know.
Okay.
But there was something out of the States last night. I just read there was positive news out of the States with the economy, and it really bumped it along. And obviously gold really reacted to that. So I checked the S&P. It didn't have, it pulled back a little bit, but nothing like the way gold did. And it was really interesting. But, you know, we know it goes up. It doesn't go, despite the number of times I've requested to go just straight up to 3,000, please. It doesn't. So these are all things, and we know that with gold, we need to have wide stops to keep us safe. It's going to struggle a little bit. It's, as you can see, for the last 4 hourly bars, it's really struggled between the 20 EMA and the weekly pivot there. So I don't know, just hang in there. There is no setup per se. To get a setup out of the 4 hourly, I need to have the bar close, and then the high of that bar, I'd like to see it close above the 20 EMA, by the way, on the 4 hourly before I see an entry to take us up to the 1920 mark. So I'm just going to sit on that. I need to see something more positive than just a bounce, because then we've got a bullish reversal, bullish engulfing in bar. You know what I'm trying to say?
No, I do.
Yeah. And for anybody out there, that is a bullish engulfing bar. If it closes up around here, and I'll be, like I said, I just feel a little more comfortable when certain criteria is met. I also want to see a reversal of the ADX and the DI plus and DI minus going in the right direction, because that could be I've hit this little level. I don't want to go any higher. I want to come back down and retest the 20 EMA on the daily. So patience on this one, because it's just shown that it's gone a little bit further than I first anticipated, or I thought it would go. And then last night we had a bit of a retracement as well, which hit a few of my stops, which were break even, but that's okay. It was just not where I wanted it to be. So I'm just going to sit and wait on gold at the moment. I think gold
it's still a bull, though. You're not considering that it's going anywhere else.
No, it's not, and she's not going to 1550. Ha.
What's 1550? Oh, okay. That's where he's got his limit orders in there, has he?
So I think it would go, and I said, Patui, I don't think it's going back down there at the moment. So I think we're just looking at it really strongly. And where we got quite excited. When you look on the monthly, it was pretty. It looks all very nice and obvious when you've got that bullish engulfing bar bouncing off the 20 EMA off a level of support. Simple, really, isn't it?
Yeah, it's trading's really easy.
Captain Hindsight's account is looking really, really happy.
Yep.
But yeah, we'll just see.
Same with that. What's the daily bar that you're on there earlier? That big reversal bar off your EMA. That totally obvious, isn't it? Why wouldn't you buy there?
Oh, yeah. So this is the 4-hourly chart on the left. Yeah. Why wouldn't you buy? Yeah. Why would you buy that one? Ring low.
Yep.
Retracement. So simple.
Mm.
By the way, I think that was the 2 a.m. bar on Saturday morning. It's the end of the week.
Holy dooly.
Yeah, you went up.
That's definitely not a good time for me to be in front of the charts.
Yeah, end of the week. Good one.
Yeah, full of elephants trunk. Yeah, no good.
Yeah, look at that one. Touch that one? No, I don't think so. So yeah, that was a very nice looking one as well. But then we've got clobbered again with this one here last night. So we just have to sit and wait. It's just going a little bit of a, oh, okay, let me just think about that for a little bit and on our bike. But we're certainly moving in the right direction. I'm not looking at a reversal. I'm looking at a pause, a consolidation, and then I'm looking for it to go higher.
Just a little question offbeat, I suppose. Do you trade any derivatives of, well, I'll call them derivatives of gold, anything that is, let's say, correlated to gold? Or
Like
is it, well, if it's, let's say, if it's the dollar, you'd be bearish the dollar, right? If you're bullish the gold, for instance. Not necessarily.
Not necessarily. And I mean, you can take those correlated or highly correlated or whatever markets, and it's not until you're in the opposite trade that you realize that the correlation has now broken down, which is really
yes,
annoying.
Very annoying.
Yeah, so things like let's have a look at that. Dollar yen and gold are meant to be inversely related.
Mm-hmm.
Yeah.
Dollar yen really does have a mind of its own. It is a shocker.
Yeah. So that is something that you look at and that is meant to be highly correlated. That correlation is broken down. Like I said, it's really disappointing when you're actually in the trade that you realize that correlation is no longer relevant. And the other one that that used to be highly correlated was the S&P and gold. No, the idea being that if people liquidated their investment in equities, they were taking it out of the market to put it either into cash or into gold as a safe hedge.
Yep. Actually, the reason I asked that, and I didn't want to lead you into it, but I'll now lead you into it.
You over the head.
I don't trade gold, right? But I do look and have for many, many moons at the, well, it kind of leads the Aussie dollar. I won't say they're correlated per se, because I don't think you can trade Aussie at the same time you can trade gold and expect the same result. But I think it is a good leading indicator for Aussie US dollar. I'll put it that way.
Yeah.
So in that regard, that's how I would think the dollar, as in US dollar, and gold are correlated when I put it against the Aussie dollar, because I think the Aussie dollar will follow gold versus the US dollar.
Oil and the Canadian dollar. I mean,
yes.
We call it, you know, it's commodity currency.
Yep.
And we have some really big gold, precious metals. We're a commodity currency. Simple. And that's where it lands. So yeah, the Australian dollar will benefit from that as well. So yeah, but I see what you're saying. But yeah, they're normally saying if people are putting their money, if the US dollar goes down, then gold would go up. And like I said, a lot of those normal currency correlations are just not, you've really got to be careful going into a trade based solely on that. because
Yeah, I agree. But I do think Aussie dollar is about as good as you're going to get for following gold. I believe.
Yep. And I think we're going to see that a lot more with just as things open up and the demand for those metals kicks in again. I mean, we were talking a couple of weeks ago, when do you think there's going to be a pause for the likes of iron ore and copper and all these kind of things? And I just can't see it slowing completely.
I know it took a hit a couple of weeks ago, didn't it? But it's bounced back again, I assume.
Yeah, so copper, let's have a little looky. And these are,
that's your new favourite, isn't it? Copper.
It is. It's flicking all over the place, but we like a little bit of a move like that one.
Can't imagine why.
Yeah, well, I didn't like the retracement back down again, did I? No, but I just sort of hang in there because I'm still finding my feet with copper and finding out what moves copper. But, you know, big orders through the London Metal Exchange really moves copper and its prices.
So how are you finding it technically?
Technically, it's pretty good technically. You know, it moves up, it likes levels, it bounces, and when it goes, and in that regard, it's not quite. I mean, I've got this long tail here on this grey stone, but it holds support and resistance really well. And I think it's because it's just a smaller market than a lot of the other metal markets. But like gold's quite a big market. Is it bigger in size than silver? I think we're going to see that it will be, actually. Copper was really an unknown commodity per se, as far as its relevance to its use.
Yeah, it's got a few uses, hasn't it?
Yeah, so what we found now is that copper is really starting to get legs, especially with the green transition that we're seeing and you know, green energy and the need for it in batteries and electric vehicles. And by the way, we talk about batteries and electric vehicles and all that kind of hoo-ha, but that's just a teensy-weensy part of the market. I was reading an article the other day about one of the CEOs of one of the Ivanhoe mine in Africa, which is the largest copper mine in Africa. And the guy was saying he reckons by the end of the year, copper will need national security for it to actually move around. It'll become quite valuable as a resource, commodity, metal. Yeah, so things like the US electricity grid needs a $10 trillion upgrade. Now, whether they're going to spend the money on that right at the moment, but there was an article only end of last week, beginning of this week. Today is Wednesday, I know, but I think it was the beginning of this week. I saw it where I've been working, where they're saying that 40% of the biggest users of electricity in the US, so places like Texas, the state of Texas, and Arizona, I can't remember, in California, biggest users of electricity, they've asked 40% of their users to restrict how they use electricity over the summer. And it's only just starting to get into summer. So that is an indication of how, I reckon it's going to be a little bit dire over there.
That's interesting.
It's interesting. Restricting use of electricity, and they haven't even got into the middle of summer over there. Like,
So that's based on a shortage of, base power load, obviously, is what they're talking about.
Power load, inability.
Why?
The maintenance of the infrastructure is inadequate to cope with with population.
Sorry, you probably said that, and I was tuned out looking at the chart.
No, that's right. I'm used to it. Nobody listens to me around here.
That's not the case at all. I was looking for a trade. That's my reasoning.
Yeah. So that's why I'm keen to
So they
wait
really
for.
do have to rebuild. They don't have a choice if that's the case.
They don't have a choice at the moment, but they've had other things like trying to keep people alive as more of an incentive to.
But apparently they're doing a pretty good job. They've got more than 50% of the population vaccinated, as I understand it.
Well, did you hear Alan Joyce's comment the other day?
I did.
He thinks he thinks the borders with the US and the UK will be open a lot sooner than anybody anticipated because most of the population is vaccinated.
And he's talking Europe as well. I've got a funny feeling he won't be on either of the first planes. Because I'm sure I won't be.
He might be on his way home. He is Irish after all.
Yeah, I think Sydney or Melbourne. Where's he? Melbourne?
He's Sydney.
Sydney. Well, I think that's probably a far better option.
At the moment, let's ask Mikey. Yeah, poor Mikey. Fourth lockdown. God.
Yeah, second week.
Yeah. But
well, a lot of the world has been in a worse position than that. I've got to say that. Not that I don't feel for Mikey and everybody who lives in Melbourne. I'm very pleased that I got back from there when I did. I've got to say.
True, but they are saying that the lockdown in Melbourne has done more for people getting vaccinated than the $1 million rollout for advertising to get vaccinated from the government would ever have done. So, look. Actually, I'm just reading John's comment. The infrastructure of the USA is a bit long in the tooth. It's woefully inadequate. I mean, as I said, the fact that they're asking people to restrict their use, that's not even summer. Good luck.
Kind of raises a couple of questions in my mind to and I'm sure they're going through that process. Do they spend trillions of dollars in rebuilding that infrastructure? And if they do, is it capable of carrying sustainable energy rather than coal-powered or
fossil fuel? Don't know.
Yeah.
I don't know. I mean, you're talking, what they announced 2 weeks ago was the opening of another coal-fueled station up in the Upper Hunter. You just look at it and go.
That's where I'm from. You know that, of course. That's my old stomping ground. Yeah.
Yeah. And it's just, you just sort of think, if you're going to spend hundreds of millions of taxpayers' dollars, aren't you going to get, a little more progressive with a transitional stage rather than a white elephant that's going to sit in the middle of the Upper Hunter? Don't you think? I don't know.
My only question is, well, there's a few questions, but the main question is exactly the one I just said. If they're going to go and spend all of that money, which they need to do, is it the same technology that carries renewables that carries fossil fuels? And if it isn't, then they're not going to do that. Well, one would hope they're not going to do that, because then they're going to have to spend it all again to build another infrastructure. That would seem ridiculous to me.
Either way, both stopgap measures require iron ore, aluminium, and copper to maintain the current infrastructure and to build the new infrastructure.
Oh, that was my other question. Is copper relevant for, and I'm sure the answer is yes until they find something else, but is copper relevant for things like carrying wind power, carrying wave power?
Yeah.
There's nothing to replace it?
I'm sure until some scientist comes up with something more amazing, but at the moment, the third largest metal imported and used by the US after iron ore and aluminum is copper.
Sounds like a good investment then. We've got a few questions that we need to address before we go on to oil, I would think.
Okay, what was this from?
David, let's go and talk about your questions.
done good on the 5-minute, moved on to the 1 hour. Because
You need the first one on that. Wrote this off as pseudoscience when I initially heard it, but my finding on Monday, Tuesday, Wednesday, high or low of the week, is actually working. Pseudoscience. so who was feeding you pseudoscience, Dave?
That sounds like a very technical.
Well, it sounds like it sounds very much like you're trading ranges, of course, which I wholeheartedly support. But you've kind of got to know what you're doing. I heard today India is the biggest holder of gold.
That seems to change, but I'm not.
Yeah, actually, you know.
Yeah, it changes a lot. The US, I heard, was the largest holder of gold. It could be India. Does it? You know, it seems to go. And at the moment, I guess a lot of central banks will, especially the ones with slightly flaky currencies, may go hard on the gold. So who knows? I'm
China's got to be. I mean,
I'd be there, wouldn't it? Up to their eyeballs.
Yes, absolutely.
Absolutely. So,
David, sorry, go away.
oh, sorry, I'm reading. I should have kept the rail network system going. It all comes a bit hard. Yeah, look, between the choo-choo trains and possibly the coal, yeah, who knows? But holder of gold, I just want the central banks to buy more gold. That's all. It really helps things along when the central banks hold gold.
Yeah, look, rail system in particular, I can tell you a little bit about the rail system in the Upper Hunter, or in the Hunter Valley, actually, because that's where I spent most of my life, in the Hunter Valley. And it, of course, is home to the world's largest coal port. Now, that coal port, at its peak production, or at peak distribution, if you like, there's and I forget how long they are, but something like 1.5 kilometers long, each train that actually does. There's no road transport of coal in the Hunter Valley anymore. Used to be, but not anymore. So that is all done by rail. And the miners had to build that infrastructure. Some of it existed, but they had to, and they're ever expanding. It's now gone through not only the Hunter Valley, it's gone way up into, can't remember the next one, New England, et cetera, et cetera. So every 4 minutes, one of those 1.5 kilometer coal trains is loaded and is moving. It's amazing the amount of coal that actually goes through there. That, you know, when I was there living, they had initially one coal loader, then it moved to 2, then it moved to 3, then it moved to 4. And a coal loader is like a big, massive infrastructure where ships come in and get loaded. And there'd be 40 or 50 ships waiting off the coast of Newcastle, which is the biggest coal port in the world. And of course, like a lot of ports in Australia, it's now managed, owned by the Chinese. They actually have a 99-year lease on the port. So of the 50 ships that were lined up, if you like, outside of that coal port, guess who now gets first digs?
Let's see now.
do you think the Japanese coal ships get loaded first?
Well, it comes down to who you know, not what you know.
Indeed. So
why we do that kind of thing, I don't know. I really don't. Somebody wagged some money under somebody's nose, and
yes, that's what it's all about. It's all about
the money train. Like I said, some of these guys should be in. It's a real. Should they be allowed to be in for longer than three years, because they know they're going, or hope they're staying, but just in case they're just going to do these couple of deals that just give them enough money to keep going, but not too much to make the next guy looks good. I don't know. It just annoys me.
Yeah, we're not going to solve that one, I'm afraid.
No, because if they're dud, you don't want them in anymore anyway. So,
David, I want some more information on what you're doing, because I can't really comment on it unless I have a little bit more information. I've done good on the 5-minute chart. The pseudoscience, that interests me. What's the pseudoscience? What are we talking about?
Brave. Are you talking about technical analysis? Go on. Anybody puts anything under the technical analysis umbrella.
Look, analysis, whether it be technical, fundamental, or bullshit, it's all relevant at one stage, right? It's absolutely it's like the clock that hasn't got a battery in it. It's right twice a day.
It is. I was just looking at Crystal's comment. She thought, Jeff, when you were talking about coal, you were talking about gold. So bucket load of gold.
I wouldn't have left the Hunter Valley if that was the case.
I was going to say the Hunter Valley and Newcastle would look really, really shiny if it was gold rather than black.
Yeah.
Shaded grey all the time. Everything's covered in soot.
True story. But the grapes still grow great wine. That's a fact.
That's true. So shall we skip over and have a little look at oil?
The other black stuff.
Oil. Hello. On Sunday, we were saying we've seen a little bit of a pullback, but I expected it to keep going. And lucky it's not made me look like a complete idiot. So that's good. We always like that, but it obviously, again, like gold, likes to have a breakout, come back, retest, and then it tries again, and off she goes. But we're at these highs. We haven't been there for quite some time. If you have a look here on the weekly, we were talking back, when were we talking? Back February? We were expecting it to go to, we hoped it would go to 70. That was the target. Back in February, we expected it to go to around the $70 mark. Again, it hasn't exactly been the straightest line up, but we certainly are heading towards it. So I think based on it, there was this little pullback back last night. OPEC plus countries have decided that they're doing quite okay, can see demand increasing as the world's opening up, and little planes going back in the air and all the rest of it. They're just seeing that things, despite what's happening in some of the other sadder situations in some of the countries that are doing it really tough, like Brazil and India still.
Do you think Asia, apparently, I heard Julian talking about, I haven't been across the news at all. I heard Julian talking about it on Sunday, about Asia being in real deep SH1T.
Yeah, they've been slow with the vaccination rollout.
So is that escalated? It must have escalated, hasn't it?
Yeah, so Singapore, Vietnam, Taiwan, Japan, Malaysia as well, I think. Yeah, Malaysia running is, yep. Yeah.
So are you in lockdown, John? I assume you are, yeah.
So they're talking third wave. It's the variant, and it's highly contagious, which is what the problem is in Melbourne. They're just saying the variant that's down there is airborne per se. I thought the whole thing was airborne, but more highly transmissible than the original one.
Yes, where previously it was close contact, now it's just you don't have to be close at all. Wow, that's scary.
Yeah, so it's a little bit scarier. But the other thing is they've been a bit slower with the vaccines, and a little bit of the Aussie attitude that is, we're an island, we're okay, we're doing okay, we're handling this okay, no rush to get vaccinated. Well, sorry. As long as you leave it.
Get the jab, it's not rocket science, is it?
it's not rocket science. I had a girlfriend, had friends over for dinner on Saturday night, and my girlfriend Leanne, she'd had her jab. I've had first jabs of AstraZeneca. And her sister, her older sister, who has decided that she's a bit of an anti-vaxxer, which is a bit of a worry because, hello, we've all been vaccinated, given the jab at birth on various things and all the rest of it. So she's decided that she doesn't want to get vaccinated. But in the next breath, she says she can't wait to get on the plane to go visit a brother in the UK. And I just said, huh? How does that work?
Yeah.
Because you need your first jab and then they tell you to wait 12 weeks for the second jab. I'm not sure which year she's intending to go, but either that, I don't know. I just don't get the attitude sometimes. It's just, she'll be right, or we want to just leave it for a little bit, and I don't know what you're waiting for. And then they'll say, oh, I just want to see how it all reacts. And it's just like, well, how do you think it's going to react? They've already jabbed how many millions of people? Not necessarily here, definitely around the world. It's the same vaccine. So anyway.
Yeah, look, there are 5 or 6 cases, I think, in Australia, are there not, of clotting?
Yeah.
There would be, if you don't get vaccinated and you get the virus and you're 60 plus or 50 plus or whatever the case may be, there'd be a whole lot more than that dead. So, weigh up the odds. That's all you got to do. Weigh up the odds. The chances of me surviving COVID, me personally, are limited because I'm in the mid-60 bracket, So it doesn't make any sense for me to be a non-vaxxer at all, full stop.
No, and the other thing is, they would tell you if you have a pre-existing platelet condition as well. They do know much more about it than they did a couple of months ago, obviously. But,
anyway, that's not going to make us any money today, is it really, at the end of the day?
No.
What is?
Let's just hang on to oil. Oil, a bit like gold at the moment, is going sideways, but I'd like to see this come back. By the time it gets over to here, that 20 EMA is going to be probably a nice little push off. So if it goes sideways for a little bit longer, I will see it probably come across to the 20 EMA will move up, being a moving average. It's got to go up and retouch price action because that's just the way it's calculated. And yeah, let's see if we can get up to that 70 mark, which would be really nice, obviously. So yeah, we'll see how that goes. But surplus with the demand increasing, OPEC did say they're going to ease restrictions, and obviously bang, straight it came down. It wasn't a huge move. It wasn't a really, really big move, but it was just a little bit of a move. So it's just saying, yeah, by the way, don't flood the market again, guys. I think it's a nice reminder. They shouldn't flood the market. So we haven't seen the nasty, moves that we had last week with the International Energy Agency saying that there will be no more new projects or anything like that. Last week was quite the move, and they were vicious moves and they were quick moves. That was all done on announcements from International Energy Agency trying to restrict how oil production should go, and then we just had this bounce back up again. Was definitely from OPEC saying, sorry, no, we're not buying that. You need to take a running leap, and we're in control here. And it's just continued to beetle all its way up. So that's been the way of the world at the moment with oil. So hang in there.
Hang in there, indeed. David, I'm intrigued by what you're telling me, and I'm not sure where that system has come from, nor am I surprised. Like I said before, there are that many ways of trading the market that it's quite ridiculous, actually, that we can actually do that. We can actually make money in 100,000 different ways. So it doesn't surprise me that you are finding whatever you've chosen to do is interesting. What I would add is, if it continues to be successful, becomes a no-brainer, doesn't it? Trade it. It's pretty much the case with everything. Trial it, test it. If it stands the test of time, trade it. Pretty much that's it, right? Back test, yeah. I prefer forward testing, I've got to say, but back testing has a lot. And I used to say every single day of my life when I was talking in webinars like this, everything you need to know about what's going to happen next in the market is in the left-hand side of your screen. Just keep scrolling back, right? And, I do believe that to a degree. And if you're prepared, David, not to trade on 5-minute charts and do go to something that's more, let me say, meaningful in terms of direction, I'll put it that way, then I think you'll have good success by trading highs and lows if you're prepared to wait for them to become highs and lows, rather than, okay, that looks like a high, let's trade it. Let it prove itself to be a high by, in my case, the first lower high, or if you're going long, the first higher low. That gives you a far better win to loss ratio than it would by just picking the high of the market, which is extremely difficult to do long term. You can get some great results out of it, no question, but that first confirmation that the high is a high is a really powerful thing to trade, in my opinion, rather than trying to pick a candle that, in your case, as you're saying, was what, high test bar or something? Yep. A high test bars are great, but they're not God's creation to the gold mine. They're certainly not that. They can trick you. So it becomes a matter of context. It becomes a matter of, are they really what they are claiming to be at this point? Is it if it's a 5-minute chart, then I would suggest to you that's got a lot less validity than it would have if it was a monthly chart or a weekly chart or a daily chart, because I think that's where you need to be concentrating. If you're talking about momentum switches, then okay, the smaller time frames work. But if you're talking about quantum changes or inflection points or reversal scenarios, then you need, in my opinion, to be looking at the bigger picture rather than that really small microcosm of a trading chart. But you can be completely successful on those if you've got the stamina, as I always say, if you've got the ability to withstand punishment. I think that's a really good phrase, because you will be punished, and you'll be punished often on those smaller time frames. You've just got to have a lot of stamina to get through it. Yes, the rewards can be there, no question, but I would definitely say that 5-minute chart for a person who, and I assume you haven't been trading for long, is not a very good place to be. You can get eaten up fairly quickly.
I remember starting on a 5-minute chart.
Did you? God, I never got there.
Wasn't there for very long. And then I thought I moved it up and went to an alley. And then I told Julian I was trading an alley when I first started coaching. He started coaching me, and the look of disappointment on his face was quite palpable. Just like, really? So these days I like 4-hourly, daily, weekly charts.
Same. Yeah, look, I rarely trade on the 30-minute chart at the moment because I haven't got time. Yeah, you need time to be able to trade those things, and I simply don't. ATR, love it, David. I think the ATR, if you're trading intraday, the ATR is absolutely something that you need to have locked into your brain cell. Most definitely. Actually, that was part of my education today, but I'm going to defer that till tomorrow. So if you're in tomorrow, I'll give you a very strong idea of how I go about that. ATR is absolutely gold if you're trading on smaller timeframes, because you need to know where you are in terms of what's possible for that day and what's not possible for that day. And believe me, it is possible to understand that price is not going beyond this level. It's just not going to do it. And I'm not saying that's 100%. Nothing's 100%. But if you can hit a probability ratio of 80, 90% that ain't going to happen, then where do you want to trade? Do you want to trade the 10% or do you want to trade the 90%? Doesn't make any sense, does it, to go in the small direction? And that's pretty much intraday trading is all about that. You've got to know that probability factor.
Yeah, stacking the odds in your favor, isn't it?
Mm.
You don't go and set silly targets that aren't as achievable as some.
Yeah, like they work 1 times out of 20. Why do you want to do that? It makes no sense.
Yeah, money in the bank, Frank.
True story. Speaking of which, I need to have a look at these charts for a tick, and if you're done, mate, we'll call it quits after that. Thank you so much. Really appreciate the input, as always. I don't know that we're going to make any fortunes out of gold or oil at the moment, because they're probably at levels where there's question marks over both, isn't there, really?
Both of them. Yeah, both of them are sitting there going, they're just chewing away, going sideways at the moment. So stand by, wait 1 or 2. We might have to wait a couple of days on it.
That might be my thing. I keep saying I've got to have a look at the gold chart and see if it's tradable from a range point of view. But
when it ranges, and it can take a couple of weeks, and it's just
but there are ranges and there are ranges. If it's coming off the top of a range, if you don't get a lower high, there's no point.
Yeah.
And if it's coming off the bottom, vice versa.
I mean, look at that one. I mean, he had an ascending triangle there, and it just
I haven't got your chart anymore.
Oh, again, I'm looking at my chart, pointing along at the ascending triangle, and I don't understand why you can't see it. But anyway, we'll talk another time about consolidation of gold.
Okay, cool. David, very, very quickly, I'll just give you an idea of what is Wednesday and Thursday relevant to me. Wednesday is very relevant to me because you will find, and this is probably along the lines that you're thinking, I find on Wednesday that there are far more what I call key reversal bars than would otherwise be the case. Now, I have to explain to you what a key reversal bar is for me. Key reversal bar is a candle, well, let me call it a candle. Key reversal candle is a candle whose high is higher than the previous day and who's closed on or near, or which is closed on or near its low. That's suggesting to me that the next movement in price will be that way. Now, if it's in the opposite direction, then obviously I'm thinking the opposite. So the low of this candle is lower than the low of the previous day, and it's closed on or near its high. And of course, what happened next is pretty obvious. There's none there that I can show you. There's one there. Its high is higher than the previous day. It closed on or near its low. Next move is down. Didn't sustain itself, but obviously you need to manage that. You need to take profit at support or resistance. That one there, exactly the same. That one there, exactly the same. They're all over the place. This is a daily chart, and they are very, very powerful. The more powerful, or they can become more powerful if they're followed by an inside bar. Like there's one there, inside bar, bang. Anyway, I'm not going through that. That's not the lesson of today. I just think that you could combine that with your thought process in trading the top and bottom of ranges, if you like. And this seems to happen so often on a Wednesday, it's not funny, where you get a whole stack of them. This is my MO, right, on daily charts. And this is exactly what I look for every single day. So that's why you see all of these highlighted on my scanner here, because every single one of them is a key reversal bar. Now, I don't trade them just because they're key reversal bars. I need to have other criteria around it. The context needs to be relevant, right? So on this one, which is Euro Swissy, happy to trade that today because the context is relevant. We're in a downtrend. okay, we've got some equal lows here. I don't have a problem with that because we can trade into those lows and take profit before we hit them, right? Now, I don't trade 99.99% of the time. I do not trade bearish bodied bars short. But on this occasion, I will, and I have, because it fits that criteria. So this might be helpful. And this is a Wednesday, right? And it happens so often on a Wednesday that it simply isn't funny. As I said, I wouldn't trade that one, for instance, because it's too close to the weekly pivot. You've got no reward to risk here. And so far, none of them are triggered, I don't think, anyway. Those that are going in the opposite direction. That one's triggered. That had room. I chose not to trade euro dollar because I trade euro Swissy. As it turns out, that's worked exactly as it should. It's gone straight to the weekly pivot. What happens next is not irrelevant, but if you're safe in the market at that point, then happy days. If it reverses, it reverses. If it doesn't, you haven't lost a cent. There were a few more that I'll point out to you. Where are we up to? Euro dollar. I think there were a couple of the pound pairs. It won't let me go down there. It wouldn't this morning either. Stupid bloody thing. There we go. Pound Swissy was one. Let me do it. Pound Swissy was one. You could have traded that no problem at all. Again, key reversal bar. I'll trade this tomorrow if that's an inside bar because it adds potency to it. I think you've got a little bit of a reward to risk problem here trading into that low, which is why I actually didn't take that trade. I didn't take pound yen either, but same applies here. Key reversal bar. If I get that as a retest, I think that's tradable tomorrow. I don't think it's tradable today. So anyway, I won't go through the whole lot, but there were 11 of them this morning, and that happens just about every Wednesday. So if you're willing and able to have a look at those, I think it would be quite good for you to do that. Never noticed the key reversal bar thing, but it's actually very eye-opening and syncs with, yes, absolutely. That's why I've mentioned it. I think it would be good for you to combine what your strategy or thought process is with those reversal bars. Yep, indeed. But use them contextually. You know, if you're trading that one, for instance, you're trading straight into the support level. So that's a no for me. But the ones I did trade, which were Kiwi Cad, I'm not trading into a resistance level until I hit here. So my entry's up here, right? So although that's got a black body, it has closed on or near its high. Not near it, not on it rather, but not too far away from it. And the way I trade, I think that's an excellent entry. Therefore, I take the trade. And Euro Swiss is exactly the same. Yes, I do have a black-bodied candle, but look where it's closed. It's closed below the weekly pivot. It's closed below the monthly pivot. It's closed below the daily pivot. And it has momentum behind it, and I can take profit at the bottom of that range. If it goes to target, then it's going to go to here, which gives me a good reward. But always I'm taking at least 50% off when I hit that first support level, which is my first take profit. So there you go. I hope that helps you. And thank you for asking all the questions. It may be of benefit to you to have a look at those key reversal bars and combine them with what you're already doing. Excuse me, I've got a sneeze. Sorry, I couldn't find the off button for my microphone. I hope I didn't scare you guys half to death and wake you all up. Righto, very quickly, euro dollar, because I like to look at it. Sorry again. I've got a tickle in my throat, obviously. All right. Before I leave you, quick look around these charts on the ones that I'm interested in. So Euro Swissy. So, you know, I've got a bias to the downside, and it looks like we've tested the daily pivot already. This might be interesting on a smaller time frame. So let's take a look at that. 30-minute chart, let's go. So what does that look like? Do I have something that I can trade? Well, if you look at that chart, you can see very clearly that we are bang on a support level. So the only way I would want to trade this at the moment would be in which direction, guys, would you think? There, I'll ask the question. What direction do you think I would want to trade that on 30-minute chart right now, given I've got this bias short? Okay, nobody's having a punt. So the answer is I've got no idea inside this range, but if I came to the bottom of the range, for instance, and it gave me exactly what it's given me here, this is where your 5-minute chart could come in handy. In fact, I'll look at it, right? Not that I trade it, but or would trade it. See how you're given that false break and then you're given a higher low in here? That would be interesting to trade long, I believe, if you trade 5-minute charts. I don't, and I won't. So I won't be tempted into that. But if I'm looking at the 30-minute or the hourly chart, I notice a few things. I notice that we've come off the bottom of the range. I notice we've got an untested daily pivot above us. And therefore, the direction I would want to trade right now is not short, but long. But to trade long, I would need to see price give me that false break scenario down here, which means that price isn't ready to go short just yet, although that is my bias. And it could easily come and test the daily pivot because that's where the probability lies on an intraday basis. But I need to have that set up. There's no point trading it from here to the daily pivot because your risk to reward's ridiculous. But if we got a nice little entry down here somewhere, then happy days. I'll be more than willing to trade it. Look, I wouldn't trade it long, David, at all. I'm not looking to trade it long beyond the daily pivot because that's where the probability lies. The probability lies that we're going to get a lower high in here somewhere and we're going to go to the bottom of that range. This range down here, because we've had a false break, just like we had a false break here. When we have a false break, we're looking to trade it back to the bottom of the range. Then we get a bounce, we're looking to trade it at the top of the range. Then we get a bounce, we're looking to trade at the bottom, et cetera, et cetera. So when we get these false breaks, in particular, not only false breaks, but when we get a bounce, we're looking to trade a higher low, right? To that side. When we get a re-entry, we're looking to trade a lower high down to here. So that lower high is likely to come off the daily pivot or off the monthly pivot. So I would be willing to trade it long on a small time frame, but I have to have a setup, number one, and it has to be safer than just going, okay, here's a good place. If it goes here, it's going there, because the reward to risk is ridiculous. But if we came back below here and got a false break to the downside, then I'm looking to trade it long, right? But my target is here. Maybe leave something open in case we go there and get the lower high. But that's the kind of thing that makes me tick, right? Because I see these things. I see that the only way I can get short is if price comes here. And the only way I can get long is if price comes here. So I trade very much on a cause and effect basis. I don't trade, okay, that we're going to hit the daily pivot, let's get in the market now. That doesn't work for me. I have to have a setup. Always, John, always if it's a break of the daily pivot and a retest, then I probably would think about an entry from here to here, but that would do me because I don't think we're going long. I think we're going short. And the best place to go short from is off resistance, not off support, and vice versa. I was looking at charts, wasn't I? So I'm not trading Euro Swissy, okay? Euro dollar's gone. I looked at this earlier and I thought, oh yeah, nice test of the daily pivot. I'm bearish the Euro. How do we get into this? There's no way in there for me. It's just a circumstance. It's bounced and gone. And that's precisely what I'm talking about. I can't just enter the market because I think we're going to here. It has, but that's not a given. It's never a given. Now I'd probably be thinking, okay, I can't trade this today. We're beyond DS1. The only way I would think about trading it intraday would be back to here. But I'm loath to do that also. So I'll just move on and go to the next one. Kiwi Cad, 30-minute chart. Now we've got a bias long, right, on Kiwi Cad. So how do we trade it long? Well, to get a setup long, I would need, once again, and I'm always looking for these, false breaks, not of resistance, but of support. So if we got under here, fiddled around for a bit, got back above it and retested it, then I could look to trade it long, taking profit at the pivots, making myself safe at the pivots. It's very, 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 very monotonous, but it's also very, at the end of the day, reliable. Now, what happens here next, in my opinion, is probably we're not going to get that opportunity. We're going to go to here, but I can't just jump in the market because that's what I'm seeing right now, because that doesn't work for me. But I would guess, and it's a guess, that price is going to go to here or here before it goes anywhere else now. And it'll probably come back to here. And then I'll be thinking, okay, we're back underneath that support level. Again, I'll be thinking false break or break and retest to go in the opposite direction. So, I hope I'm not confusing you, but all of those things happen in very fast time in my mind because I've seen it that many times before. Euro Swiss, Euro dollar, Kiwi Cad. It's the only other one I wanted to have a look at, right? To see if there's anything there on the smaller time frames that we can trade. That's Kiwi Cad. We've just been talking about it. Sorry. Aussie Yen and Euro Kiwi are the other two. Euro Kiwi. Euro Kiwi, we're still biased short, right? And we do now have potentially a lower high. Now, I'm not convinced that this is necessary to have the lower high. In other words, I'm not convinced which direction this is headed next. And the reason is, yes, we've had a false break of that range to the high side, but we really didn't test the bottom of the range, which is super clear, right? Absolutely super clear. And here are the false breaks I'm talking about, right? False break to the high side, higher low, way it goes. False break to the high side. Where's my lower high? Maybe it's here. But it's questionable because I'm not sure now which direction we're headed next. Looks to me like we're going short, but on intraday basis, I'm not 100% sure where we're going. So I haven't got a trade there. You could look at that bar and go entry there, stop loss there, take profit here, works. It makes sense. But the bar I'm trading makes more sense, in my humble opinion, because the reward is far greater. And the only other one is Aussie Yen, right? Now, Aussie Yen is absolutely doing jack and has been doing jack since when? Even back here. No, it got above there, didn't it? As soon as it broke above there, it's just stopped. So the 26th of April, so it's been in there for a bit over a month and refuses to follow through on anything. There's been some good setups. We traded that one, right? There's another one of your key reversal bars, David, that we traded, went to support, came back off it, top of the range. We're looking for a lower high, right? Well, potentially that was it. Potentially that was it. Maybe that's it, but it's not a lower high anymore. So it's all over the place. Very, very hard to judge. But I'm still biased to the short side. So let's see what the 30-minute chart delivers for us. Okay, pretty clear, isn't it? That we've got support, support, bounce. What we'd be expecting here is another bounce, wouldn't it? And where's that bounce going to go to? Well, in my humble opinion, get it right. In my humble opinion, it's probably going to be there-ish, because we've now got another, in my opinion, again. I keep saying that, but it's kind of important because nothing ever is 100%. in trading. You can make all sorts of stories up, which is why you see, different traders who have different methods of entering the market see completely different things. And I'm okay with that. This is not good. I don't like it too much. That's probably better there, or even on the monthly pivot. But for mine now, we've probably lost the intraday right to go short unless we break this level and retest it, which would then be, there's a bit of a confluence going on here as well. That would then be coincidental on that line, right? So break there, retest, that becomes a pretty clear short for me. But look how good this trade line is, right? Every time it hits it, it bounces off it. Looks to have done that again pretty much, although we're not bang on it, and that raises the question. So a higher low here on a 30-minute time frame makes sense to trade back to the top of the range. I hope I haven't confused you, David, by all of that very brief, but maybe even comprehensive, treatment of how I transfer my bias on a bigger time frame into a smaller time frame. But it's always going to be about context, always. And without context, you might as well just throw it into the wind, the SH1T into the fan and see what happens, right? Which is never pretty. Okay, we have come to the end of the show, guys. And for today, I thank you very much for your company. Ainsley, thank you very much for yours. And we'll look forward to tomorrow, which of course is quiz day. And I think John probably got a couple of questions out of today, just maybe not. And also, I want to go through that little bit of education session that I was going to do today, which was all about the intraday trading scenario. And David, I'm sure you'll be interested in what I have to say tomorrow, which is along the lines of what I spoke today in terms of those key reversal bars. But it's more to do with your ATR, and your ATR is very, very, very important. Thanks for your company, guys. Always a pleasure to have it, and we look forward to it again tomorrow at the very same time.